Dzień dobry Państwu. Witamy bardzo serdecznie.
Good afternoon to everyone. Welcome to the press conference after the meeting of the Monetary Policy Council in March. Today we have Professor Adam Glapiński, Governor of the National Bank of Poland and the Chair of MPC and members of MPC, Professor Krystyna Ancyperowicz and Professor Rafał Sura. Mr. Governor, the floor is yours. Information from the meeting of the Monetary Policy Council held on the 3rd and the 4th March 2020. The Council decided to keep the NBP interest rates unchanged, reference rate at 1.5, lombard rate at 2.5, deposit rate at 0.5, and rediscount rate at 1.75%. The incoming data from the global economy indicate a stabilization of economic growth at the relatively low level. In the euro area, economic growth declined in Q4 of the last year amid the ongoing downturn in industry. In contrast, in the United States, GDP growth remained stable in the period, despite the subdued activity in the industry. In China, GDP growth stabilized in Q4 at a lower level than in previous years, and economic activity growth weakened markedly at the beginning of 2020. Due to the spread of coronavirus, uncertainty about the global economic outlook has increased, and sentiment in the financial markets deteriorated recently. Global oil prices have fallen considerably. In turn, the prices of many food commodities remain high. As a result, inflation in the global economy, including the external environment of the Polish economy, has risen in the past few months. The US Federal Reserve lowered interest rates in March 2020. The European Central Bank is keeping the deposit rate below zero, while conducting asset purchases and signaling the maintenance of loose monetary policy in the coming quarters. In Poland, economic conditions remain good despite the slowdown in economic growth. In Q4, real GDP growth stood at 3.2%. GDP growth was supported by the steady consumption growth, albeit slightly lower or slower than before, fueled by favorable labor market conditions, strong consumer confidence, and social benefit payments. At the same time, investment continued to rise, and the contribution of net exports to GDP growth remained positive. According to preliminary goods data, inflation rose to 4.4% year-on-year in January 2020. The rise in inflation above the upper bound for deviations from the inflation target was driven by regulatory and supply-side factors that remain beyond the influence of domestic monetary policy. These comprise, in particular, higher electricity prices, higher fuel prices, an increase in waste disposal charges, in the excise tax on alcohol and tobacco, as well as a further rise in the prices of unprocessed food. The favorable financial situation of households and the resulting rise in consumption demand also put an upward pressure on price growth. The Council became acquainted with the results of the March projection of inflation and GDP, prepared under the assumption of unchanged NBP interest rates. The March projection takes into account data and information published up to 18 February 2020. In line with the March projection based on the Neckmont mode, there is a 50% probability that inflation will be in the range of 3.1 to 4.2 in 2020. Compared to 2.1, 3.6 in the November 2019 projection, 1.7, 3.6 in 2021, against previously 1.6, 3.6%, and 1.3 to 3.4% in 2022. At the same time, the annual GDP growth, according to this projection, will be with a 50% probability in the range of 2.5 to 3.9% in 2020, compared to 2.7 to 4.4 in the November 2019 projection, 2.1 to 3.9 in 2021, against 3.3 to 4.2 and 1.8 to 3.7 in 2022. In the Council assessment, the outlook for economic conditions in Poland remains favorable, yet GDP growth in the coming quarters will probably be weaker than in the previous years. In the recent period, however, uncertainty about the scale and persistence of the economic slowdown abroad and its impact on domestic economy activity has increased. In the coming quarters, the annual inflation may remain above the upper bound for deviations from the inflation target due to supply side and regulatory factors. That is, ones remaining beyond the direct influence of domestic monetary policy. As the impact of these factors fades and the GDP growth weakens, inflation will gradually decrease. In the monetary policy transmission horizon, inflation will be close to the target. Such an assessment is supported by the results of the March projection of inflation and GDP. The Council believes that the current level of interest rates is conducive to keeping the Polish economy on sustainable growth path and maintaining macroeconomic stability, while at the same time enabling it to meet the inflation target in the medium term. The Council adopted the inflation report March 2020. That projection will be presented to you at 10 a.m. on Monday at a press conference. Thank you very much, Mr. Governor. Your questions now. Rafał Tuszyński, Polish Press Agency, Economic Office. The projection includes the data up to 18 February 2020. That's before the epidemics of coronavirus and the spread across Europe. So what's the closest scenario included in the projection, and what is not included in the projection? So which other scenarios do you believe could be considered? Well, we have included coronavirus in our information, but there is no doubt that the coronavirus and the epidemics bring one effect, or rather, I should say, the panic related to the epidemics. It brings various risks, and it certainly entails the risk of dwindling economic sentiment, whether deep or shallow, whether serious or transient. It is hard to tell at the moment. What is the MPC's position on the overall balance of the risks? What's the most likely scenario versus the projection? The balance of risks is described. Coronavirus is one factor, but there are many other factors. We do anticipate declining economic sentiment in neighboring countries across Europe and in the US. But to what extent this situation will aggravate, we do not know. The Fed's decision taken yesterday also shows that they also do consider this. The market currently sees the aggressive policy of reducing interest rates. So how is the MPC going to respond? Well, we are taking it cool-headedly. So we have seen different opinions of increases, decreases. We will make relevant decisions in due time. We did not succumb to pressure previously, and we are not going to take any hasty decisions. We plan a few quarters ahead, at least, and for the time being, we believe that the stability of interest rates is really strong, and this is the right strategy to stabilize the situation. And the situation in the US, of course, is different. Each country has a different situation in finance and the economy, and also different regulatory framework of the body that is responsible for interest rates. In the West, in particular in the US, this collapse on the stock exchange, on the stock markets, had to bring a response. Thank you.
Dorota Bartyzel, Bloomberg News. Good afternoon. Dear Governor, you've mentioned the US, and by 50 basis points, Canada reduced the rates. This is the latest information. And we know that Europe takes into account some joint action, joint efforts. Have you discussed today the impact of this decision as regards a joint approach to easing policy of interest rates? This is euphemistic. We must say that we are speaking about easing and loosening of interest rates. They've got negative interest rates in the EU already, so maybe we are speaking about going downwards even more. Is it going to be successful or not? It is an old story as regards the euro area, whether this approach is effective or not. Those in favor of this policy say that the situation would have been even worse should there be no such policy. But there are opponents of such an approach. Economic conditions are deteriorating and the rates are below zero, and maybe there is going to be a downturn in major EU member states, and the US might face a downturn. And we hope that the European Central Bank, in cooperation with leadership of EU member states, fiscal and monetary authorities of the EU member states, we hope that they're going to promote economic development. Our situation is totally different. And we have a really positive situation, growth of more than 3%. We have some intermittent increase in inflation, but it is going to go down. So let me go back to my question. As regards Polish monetary policy, the further interest rate cuts in the EU, will it have an impact on our situation? When we speak of central banks in the euro area, if they're going to be effective, it's going to have a positive impact on the Polish situation. Is it going to have a positive effect as regards our monetary policy or economy? If it's positive for economic growth, that might mean that we shall increase interest rates. Right. As regards situation in other countries, they have different frameworks. For example, in the US, Federal Reserve are also in charge of issues related to employment, to the labor market. We are in charge of price stability and stability of the Polish currency. And then we can support the government if these are challenged and threatened. You are mentioning that we have an economic growth of over 3%, and you expect that it's going to remain unchanged. And maybe it's going to be a little bit below 3%, but around 3%. It is still quite a positive result compared to other EU member states. In 2022, we have the projection already, and 2.75%, 2.8% will be the economic growth. Do you think this is that level when you are going to consider cuts of interest rates? So we have to take into account inflation. We have to take into account the sources of these changes. And inflation, as we've mentioned, is related to issues related to demand side. And without this supply side shock, administered prices and draft and ASF, African swine fever, coronavirus, we would have met the target should there be no such factors. So in a normal situation, in a regular situation, we would have met the target if we are having an epidemics or pandemics and we are going to curb the situation related to coronavirus. I'm certain of that. I believe in medicine and organization of these societies, and if there is a vaccine against coronavirus, if there is no draft, and energy prices are going to be stable or more stable, we will reach the regular level of inflation. But monetary policy has no impact on the mentioned factors. 2.75% of growth, is it that level that shall be alarming so that you consider interest rate cuts? What is alarming is the piece of information about inflation. And we do promote growth, of course. 2.7 is a quite reasonable growth, although natural potential growth path is 3.6%, 3.3 up to 3.6%, in accordance with the estimates of the NBP. 3.6% is the average natural growth rate path for Poland. Other questions? Mr. Duszyński. Let me also add that interest rates are going to be stable. And if we take into account these supply side factors and administratively regulated prices will stabilize, the situation will be optimistic. You've mentioned that you are optimistic about fighting coronavirus, and when we face the improvement of the situation, we will mention the stabilization of interest rate. Are you considering rises of interest rates? Ladies and gentlemen, I've mentioned it several times over a period of time that I predict stability of interest rates, and if there are any changes, there are going to be cuts rather than increases. And some people prefer increases of interest rates. If there are going to be any changes, there will be cuts. For half a year, there are some factors discussed at the international level. The economic conditions might be deteriorating, and deflation rather than inflation is going to be a threat to the majority of countries. There are some unexpected factors related to supply and prices of goods, which is unrelated as regards monetary policy. And in the first quarter, inflation has risen. There is a surge in inflation, but the situation is going to normalize, and we are going to go to close to 2.5, to the mid of the target band. So you say stabilization, or if any changes, a cut in interest rates. What are your opinions?
We also adopt the same viewpoint, because the most important thing is the reason behind the inflation rate, and the reasons, as we investigated, are outside monetary policy. So we can only use monetary policy to cool down the economic situation, and it is nevertheless lower than the potential of the Polish economy would indicate. So there is no reason to increase the price of money and act pro-cyclically. So we are going to maintain the current interest rates for as long as possible, and we hope that this policy will turn out to be effective. And by the end of our term of office, we do hope there will be no need to rise or decrease the interest rates. However, if some secondary factors come into being, vis-à-vis the ones that have caused the uncertainty and the disturbances on the different markets, including financial markets. And if we do have a very low dynamics of GDP growth, and if we see that investments are dwindling and consumption is decreasing, then we might need to go into this direction and reduce the price of money. But we have a lot of room for maneuver, considering the price of money on the interbank market. If you compare it to what has been happening across Europe, we still have some room for maneuver. But I think we would be rather going towards stabilization. And if the economic sentiment suddenly deteriorates, we will try to support the economy, but I don't expect any revolution here. Yes, your question for your view. For a number of quarters, I have been claiming that stabilization of interest rates has been the optimal scenario for Poland's economy, and also under current situation, despite the new risks mostly on the side of external factors outside Poland, but this perspective that I have held does not need to be reviewed. And in addition, the data that we have received show that we need to really remain alert and watchful, because we need to take a look at the epidemics and how it evolves and how it impacts the real economy, including the Polish economy. Well, nobody knows at the moment, and nobody can predict that. But in conclusion, and giving a direct answer to your question, I believe that it is not likely in the near future that we will see a decrease or an increase of interest rate. Stabilization is the optimal scenario. Thank you very much. Mr. Berenda, please. Hello, Krzysztof Berenda, RMF Radio. I hope you don't mind if I remain seated. I have a few questions about the coronavirus, and I suppose that not all of them will be answered, but has the MPC considered any non-standard emergency measures for the future? Do you mean for economic impacts of the coronavirus? Yes, of course. Well, if there are any, well, what kind of effects or impacts could there be? Well, in the neighboring countries or the countries where we have the busiest economic exchange, well, the economic sentiment might deteriorate, like Germany might fall into relatively permanent recession. So this will impact Poland's situation, and the economic activity might deteriorate. So we have had a bundle of measures prepared in 2008, and in the start of our term of office, we reviewed those measures, we organized them, and we are ready to work for the benefit of activity in consultation with the government. But I do not think that coronavirus is going to affect the economy that much, considering the announcements that we heard from the Chinese government and the US government and Western monetary policy authorities. This is not going to happen. They have been taking important measures, and they have been introduced bundles of measures in fiscal policy, financial policy, and hopefully this will all be successful and prevent permanent recession. But here within Poland, there are no conditions or no tokens of the economic situation deteriorating. As far as I heard, the greatest problem with coronavirus is a panic. Yes, panic is something that leads to certain dysfunctionalities or malfunctions in economic life, and it might affect some local activity. But I think we're really well prepared. I'm talking about Europe as a whole. We have noticed and have been watching things happening, the developments happening in France and Italy, but they have been coping. in this way or other. And as far as we know, coronavirus is just a worse kind of flu virus. It's new, unknown, no vaccines have been developed, and hopefully they will be developed soon rather than in 18 months or so. So this is the reason of the situation. So the only effective measure is quarantine of certain regions, which of course upsets the economy. Consumers might be terrified with what they have read in the media. They will not go to shopping malls and centers. This will undermine the demand for many other goods apart from food. So all other goods will see deteriorated demand just because people stopped going out to be in places where there are crowds of people. When we look at the effects of quarantines, yes, the quarantine is transient. Well, so where should we look? At Wuhan. We should be looking at Wuhan. And the Chinese authorities have said that starting from the 1st April, all production facilities and services in Wuhan with the province, I can't remember the name anyway, this will be back to normal, not back to normal mode of operation. They have isolated, identified people who have been affected by the virus. They have secured them in the hospital system, and the system is going back to the regular operational mode. So this is actually the essence of it, to identify the circle of people who have dealt with those infected and then go back to normal. As was the case in Poland, we are identifying people who have come into contact with those who are ill. We quarantine them, and very often it turns out that those people have not been infected and everything goes back to normal. But the main problem is the social, societal reactions, where consumption of certain goods has declined, apart from food, because the demand for food actually has been rising. So if you ask us about the impact on GDP growth, I mean the impact of coronavirus. Well, ladies and gentlemen, I know that there is this Polish Economic Institute, that has provided estimates, but we do not know the range or the coverage of those phenomena. Same in the West. You can actually make an assessment for Italian cities that have been affected in terms of the tourism business, hotels, cafes, and so on and so forth. So you can see, online cameras which show that there are no tourists and no people. So I'm sure they have been counting serious losses. But if you go to Krakow, in Warsaw, or to the seaside, the crowds are as big as ever. So one more question. What is the worst realistic scenario? Do you mean related to coronavirus? Yes. So there might be, through tourism and hotel industry, there might be an increased demand for food, but lowered demand for non-food products, which cannot be replenished later on. But as you know, I go to the Basel meeting of the Bank of International Settlements once in 2 months, and there are some very daring concepts of how to counteract that are being presented there. There are some shared measures in fiscal policy and monetary policy. So overcoming this Chinese wall between central banks and ministries of finance and governments, and taking certain shared measures focused on certain social groups, targeted at certain entities to replenish demand, because with demand it will be quarantine and some other measures. So starting from the flu season, I think 2 million people actually have been affected. Some people passed away. So this is a new element that we need to grapple with, and we will need to get used to it. But there is no vaccination. This is the main difference. And the mortality rate is a few times higher, as far as I know. But we have to somehow cope with it and deal with it, and we will. And of course, there might be some sub-Saharan African territories where the Organization condition of the society. Our communication and transport and medical care is weak. So in those areas, regretfully, the solutions might be the ones that we know from centuries ago, which is really very sad for people who are less immune, the elderly and those who are ill. Whereas civilized countries or countries from the West, they have been defending everyone to the same extent, and they have done it effectively. For the time being, knock on wood, as regards the US, Australia, Western Europe, this is going to happen. And we have time for 2 more questions. Yes.
Mr. Tuszyński, over to you. As regards Poland, when we speak about the pessimistic scenario abroad, what will the Monetary Policy Council do in Poland? For example, some non-standard approaches. Like in 2008, we had a very difficult situation, and we speak about the demand side stimuli and fiscal policy. Government have to stimulate issues related to the supply side in order to reach a balance as regards the economy. So, to sum up, the Monetary Policy Council cannot do much. Not really, but we are ready to step in, and there is no problem with liquidity as regards the banking sector, which happened in 2008. And what about the reserve requirement? Are you going to reduce it? You can browse it. There is a Skrzypek package 2008. Use the Google browser and find information on that. We've been thinking about repo operations. What else can be done? We are open to cooperate with the fiscal policy instruments. There are no more dogmas in the Western world, and the ECB has changed their approach. They have certain tools. The ECB has certain tools, but we don't need them because our situation is better. We're realistic, and our situation is really better. I'm not saying we are better, but the situation is more positive. We have better economic growth, we have positive interest rates, we don't have any internal stressful situation compared to other EU countries. So we have certain positive reserves by the end of this term in office. We don't expect any radical changes. Economic conditions in Germany will improve, and our economic growth will increase. And this is it. The situation, the outlook is quite positive, although the situation is worse compared to the previous year. But let us stay positive, and other people can envy us. Ms. Bartyzel, I understand the importance of uncertainty in the world. It's not only about economy, it's about health of people, which is the basic thing. And we are now speaking about economy. Of course, we're at such a place where economy is of utmost importance. But when we depart from the issue of uncertainty and we have this projection that says we don't do anything as regards interest rates and economic growth is positive, and this projection for the Monetary Policy Council suggests certain steps that have to be taken. And when we speak about interest rate, that is within the target, but economic growth is below 3%, the projection is not the center of our attention. Quite recently, in terms of monetary policy, we've been thinking about transmission time as regards the transmission mechanism in terms of monetary policy. And you have not predicted that today, now, and in the nearest quarters, inflation will be above the target. It may exceed the upper bound of the target tolerance band. And we are not actually focusing on it because it's the future. But what about the time of transmission mechanism effect? So as regards transmission mechanism time framework, for the economic growth to be not lower than 3%, next year we will have fewer EU funds, and 2022 is the largest question mark. Then interest rates have to be cut late this year. But let's remember that we cannot actually promote economic growth using monetary policy because it's not about the lack of cheap loans. It is a different situation compared to 2008. The reason is uncertainty mainly, and economic conditions deterioration in neighboring countries. For example, in Germany, our partners, exporters are looking for other partners more further away. I'm an optimist. I'm sure China is going to deal with the situation and they will not have an economic growth below 5% as some people expect. I believe the situation is going to improve in China, and the supply chains and cooperation is going to improve, and the world economy is going to deal with these hurdles. And in our case, draft ASF, energy prices that are administered, and excise duties on oil and fuel. These are major factors. But look at Canada, the Bank of England that might consider the emergency move. What about their decisions? Yes, these are positive steps forward, but they are having a different situation. Our loans are cheapest in history in Poland, so we don't have these problems. So this uncertainty that we feel, this is about consumption, and in terms of entrepreneurs, this is about investment. Let me go back to the question, dear Governor. A quarter to 3, the decision arrived, and we were afraid you cut interest rates. We had to deal with a lot of information, and some of the pieces of information were totally new to us. This was news from the world, and the decision had to be reached by hawks and doves, and these debates can change the situation, and we've been witnessing that discussions and debates can change the point of view of members of the Monetary Policy Council. But this is a positive, constructive debate, discussion, and we reached a conclusion. Maciek looks at me that I should finish my questions, but let me ask another question. What else might happen? Draft might aggravate. Are you going to Italy? Yes, I have tickets, flight tickets for my trip to Italy in May, and the European Central Bank moves it to the 20th of April as regards bookings for gas at the ECB. They are moving forward all the meetings, even up to April the 20th. They are very cautious, but I do not see the reason for the 20th of April. BIS is postponed, so we are going to communicate via IT solutions. Washington has been cancelled. We are going to use IT tools to communicate again, so decision-making looks in such a way that people don't want to be accused that people got infected, because during these meetings a lot of people arrive and they have to fly, and we are not scared. But I understand such an approach because people are scared, because elderly people, people with feeble health might face a problem. Young people, children, healthy people shall not be afraid but people of my age or of feeble health, they might feel scared. And should I have parents alive, I would have told them not to travel now. This is the situation we are facing now, and it does have an impact. It affects the situation related to consumption and so on and so forth. Let me also add that there are some other issues, not only prevention.
Certainly, epidemics or some threat of epidemics, means that we should avoid contacting people who have been ill. As for travel, this is a very down-to-earth problem. People who stayed at the airports for 1 week or longer, they have warned their friends. So many other people who would like to travel would decide not to do so. So those decisions made by international institutions have been driven by this attempt not to expose people to this kind of waiting time. But I have heard from friends who have traveled nevertheless, and they said that there are no crowds and it's really nice. So as regards economic growth, I'm going to remain optimistic, and unless something happens that will frighten entrepreneurs, because these things might happen, like some maybe unannounced taxation or some other external decisions or shocks, I will nevertheless tend to believe that we're going to be close to the upper limit of the band. Well, if there is some kind of dwindling or downturn, the economy will bounce back and grow rapidly sooner or later. And we know, maybe we shouldn't be saying this, but egoistically speaking, knock on wood again, Poland is in a very good financial and economic situation, and in many other respects. Our neighbors, other countries are going through hard times, so we're keeping our fingers crossed because we're all in the same boat, so to speak. However, our dependence is not as strong as it used to be, and I mean our dependence on the German economy and the Eurozone, but this is our main partner. Thank you very much for today's meeting, and we invite you to the Monday press conference. Thank you very much.